Chaitanya. This topic has been chosen after a lot of thought process behind, after consultation from the industry, because when we deal with a lot of manufacturing units on a day-to-day basis, and their pain areas actually, we are trying to cover their pain areas and how our knowledge or whatever experience we have in this domain, how it can be helpful to the industry at large. So
Sure.
with this, yes, over to you, Chaitanya.
Thank you. So, Meenal, so let me get to the straight subject straight. So, capital goods are very important for any industry. So, it is so important because there's a lot of capital that goes in, and if you don't plan it well, your capital gets caught. Capital gets lost. It's non-productive. Now, however, when GST credits become a blockage, right, that is also a capital, right? So, how can somebody looking at how can somebody in the manufacturing sector looking at expansion plan for that component of GST refund as a capital? So, would you want to how do they
Yeah.
claim that GST refunds?
So before that, let me explain how the GST, which is paid for any manufacturing unit at the beginning, what what process it goes through, and what are the challenges faced by any business owners. So, like you must have heard this proverb very well, that finance is the blood of the business. I would add a little to it, saying that capital goods are the heart to the business. So, for
Mm,
any manufacturing unit going in for expansion, or a new unit coming up, like a brownfield or a greenfield project, a new unit completely coming up in any part of India, when you purchase your capital goods for your new manufacturing unit, of course, GST comes into picture. So, for example, like if you're setting up a new food processing plant, or a chemical plant, or a fertilizer plant, assuming a capex have like plant and machinery investment of around 100 crores. So a straight away calculation goes like this: standard rate of GST is 18%, right? So 18 crores is what we are going to talk about today,
correct.
right? So 18 crores is an amount which has to be paid to the government indirectly through your vendor, and this becomes as a credit in your GST account. Of course, you may be thinking that that is going to get liquidated or get adjusted against your GST liability in future. But then it takes its own sweet time, maybe 2, 3, 4, 5 years, depending on the nature of the business, right? So if I take an example of any typical exporter, what happens for them is, even on their supplies, on exports, no GST to be paid, right? So this credit of the GST which you have paid on the capital goods will pile up in the form of credit to your account, right? So this impacts the business cash flow very badly. So what I would recommend for any new manufacturing unit or an upcoming manufacturing unit, may it be pharma, food processing, agro processing, chemical, fertilizer, then engineering, no, any sector, biodiesel, any sector across India, you have to plan for this 18% GST as well. So I have come across many business owners who just say that I'm going to set up a project of 100 crores. They do not uh, keep in mind this 18% amount. And when they go to the bank for the financial, etc., they just talk about like, okay, 100 crores is what I want the fund as a business for the business. But when you really get into this, you realize that, okay, 18% is what? Of course, they are also right in thinking that they'll get the claim adjusted in future. But what about that long period, 2, 3 years, 4 years? Because that is the initial period where you will be needing your funds the most. So what we are trying to solve and discuss today would be the 18% amount or 12%, whatever, on your capital goods. In different scenarios, may it be for a manufacturer, exporter, or a deemed manufacturer, exporter, and how to get the most out of it so that your cash flow is utilized in a most efficient way, right?
Interesting, interesting. Now, what are the most suspected domains that get hit by this?
So the most suspected domain, as I mentioned, one is an exporter. Reason being, on their exports also no GST is applicable. So whatever their purchases of the raw material or the semi-finished goods for their final products, that also they need to claim the credit on top of the capital goods credit, the plant and machinery credit, which is piled up. Then the other is the EOUs, because EOU has got a lot of procurements from the domestic market, still for which they have to pay GST, unlike SEZ. So export oriented units, 100% export oriented units, or exporters, or deemed exporters. These are the three major categories where it is difficult, no, to, of course, there are many other, but today we are especially focusing on these three basket of exporters or deemed exporters or EOUs who majorly get hit. And then it is just lying as a current asset in their balance sheet for long, long period. If you do not take steps for this at the planning stage, see what happens. The other aspect, if you liquidate, still you will be able to liquidate the GST credit only to the extent of the raw material, semi-finished goods, because uh, because the value addition part and all those part comes into picture, and because of which only that portion gets liquidated. And the capital goods portion credit, GST credit, keeps on adding or remains as it is, but it doesn't get no diminished gradually unless you have a sizable domestic turnover or whatever could be your another business scenario. So this has to be planned very, very well in advance at the time of your planning for plant and machinery. Otherwise, it is very difficult to liquidate the same metal. I know of a EOU unit based out of Pune. They didn't plan for all this. And then what happened? Of course, they were doing exports, and also even for EOU, they were doing exports under LUT, so without payment of GST. And they were claiming GST refund as well, pertaining to the raw material, the semi-finished goods, and the input services. However, they were not able to claim the credit of the capital goods, which they should ideally be getting had they planned for the same well in advance at the time of placing order or before the visit of the machinery in the premises, the manufacturing premises.
Very interesting. Very interesting. So, can you give me a an example of what could have happened, or maybe from your experience, have you
Yeah,
come
so
across somebody?
yeah, that's so what happened, what could have happened in that EOU unit, if I can go back and share that. So when they imported, when they locally purchased their capital goods from the domestic market, what they had done was they had paid the entire GST amount on the purchase of the plant and machinery. Uh, they got the machinery in the factory, everything done, GST paid. GST remains as a credit in the balance sheet, which was a problem. Instead of that, what could they have done is they could have applied for a few, there are different options given under the foreign trade policy, where you can purchase capital goods against those EPCG or other licenses and claim the credit of the same. So there is a planning mechanism, but they could have saved, not saved, but they could have got the refunds of the GST amount which they had paid to their vendors from the government. By so first they had to pay the GST amount to their vendors. Once it gets credit to your GST ledger, if I Like in this case, maybe it was around 4 to 5 CR, the GST credit which was lying. They could have opted for foreign trade policy, various schemes which are prescribed. One is EPCG, one is deemed export, chapter 7 of the deemed exports under the foreign trade policy. And then they could have gone back to the GST department and said that because we have this licenses, these obligations, etc., we are eligible to claim the refund. So on there are few grounds which are provided by the GST authorities, which are linking back to the foreign trade policy issued by the Directorate General of Foreign Trade, which falls under the Ministry of Commerce. So, so we have to link two different laws, foreign trade policy and GST, by virtue of which you could have that unit could have easily got refund of the GST amount, maybe in another 6 8 months once the machines were installed in the factory, etc.
Interesting. So
This
now,
could have easily, sorry,
go
I wanted to add one last line. So this, how could have, so this could have impacted very easily their cash flow and saved, eased out lot of pressure on the working capital.
all right. I have one question, but basically two-pronged. Now, somebody is going into import-export business.
Hmm.
What would be the suggestion you would give them before they get into this journey?
So, first and the foremost is what is going to be your supply chain, as in from where you are going to buy, either imported or domestic, and where you are going to sell. So, a very basic blueprint you should prepare and plan for along with your projections, and also map the alternate options along with the duty saving options. Like as I said, in that EOU case, if they had planned plan A, plan B, plan C, there could be many. They could have even imported. So even on your procurement side, you could always map whether you want to go for imports or for a domestic purchase, along with the tax implications, along with the duty implications, and then proceed ahead. And that would have made huge difference in the cost, in the working capital, everything, right?
Sure. So now the next question. The ideal scenario does not exist. So
Sure.
people get into issues for maybe because of oversight or maybe because they do not understand the implications of taking a certain action. So say somebody gets into that situation, what would be one small quick um, remedy? Where do they start?
So, very, very basic and a very easy thing to follow. Whenever you are planning your procurement of the capital goods for your new manufacturing unit, just you calculate what is your GST amount. Basis the quantum, you will decide that, okay, what options to be followed. And as I said, we need to combine the foreign trade policy and GST law together. But yes, the first point would be application of the benefits which are provided under foreign trade policy to such exporters. So we need to apply for those respective licenses, go to the vendor also. So you'll also need to take the vendor on board and into the loop when you are claiming such benefits, because it is interlinked. So I'll go even one step ahead. Would you ask this question? This completely skipped out of my mind. So one option is where you can claim the GST refund. On top of it, there is another option also, not an option, but an additional benefit, where if you sit with your vendor and you plan the machinery procurement. So I'm going one step ahead, where the machinery vendor also would be planning for your order, right? So if the machinery vendor is also importing directly or indirectly something, there is even a scope of savings there. So this will not just help you on the working capital side of getting the GST refunds back, but it can also help you saving on the machinery cost. Because
Brilliant.
then what happens is, you are taking in him in the loop, and you are saying that I'm an exporter. And for an exporter, there's a very simple fundamental: the goods should be exported and not the taxes. And this transaction of purchase of the plant and machinery from your vendor is considered as deemed export. So again, it's not back to back. When you plan and sit with your vendor, all these options can be worked out, and uh, so cash flow can be saved. On top of it, your profits can also go up because your cost has gone down. So it's
Brilliant.
like uh, एक पत्थर से दो निशान, something like that.
Correct. I'm sure all the manufacturers who are in the import domain would
Hmm.
be super excited when they listen to this.
Yeah, correct.
Super. All right. Thank you. I do not have any further questions on this. So unless you want to make any closing comments.
Yeah. I think I had prepared one for one thing. Rest of this conversation was all impromptu, but then I had prepared for one quote, and I think this should be a takeaway for any business owners, entrepreneurs. And it's like, if you want to, like, this was a quote from Jack Welch, and he said that if I had to run a company on three measures, I would have taken, first, of course, is the customer satisfaction. Second is the employee satisfaction, and the last is the cash flow. So if you have a hold of the cash flow of your business, uh, so we touched only one aspect of the cash flow today, but as a business owner, as a promoter, or a decision maker of any large or a small organization, if you have a control over your cash flow in the business, on top of your commercial aspects of the customer satisfaction and employee satisfaction, I'm very sure that you'll be able to run your business more efficiently in terms of your numbers, the operating, the non-operating aspects, the cost. So it covers everything, I think. If you are able to monitor and manage the cash flow well with various schemes and policies provided by the government of India, I think you will be able to do much better.
Awesome. That's a nice one. That's a nice one. Minus the cash flow, there's no fun in the game. So the first thing as a consultant I would do is look for cash flow. Where am I generating cash?
Yeah.
Great quote, and the way you put it for manufacturing makes a lot of sense. Meenal, thank you so much. So, what would be the next topic that we will come up with?
I'm planning for something very interesting which we haven't touched till date, like no, e-commerce exports is something which is the buzzword, and even in today's budget, Mrs. Nirmala Sitaram has touched upon this aspect as to how they'll put up the e-commerce hubs across India and push MSMEs further to get into e-commerce exports.
Awesome. I am excited.
Yeah.
There's so much that happens on e-commerce for me as well. So I look forward for our next conversation. Audience, thank you so much. I know this format of having conversations will not allow you to ask questions directly, but we have been posting regularly on LinkedIn. Please do send in your comments, send in your questions, and we'll be more than happy to take those questions. And if need be, we can also get on a call to help you solve these issues. And next time, as Meenal said, we will come back with the e-commerce angle to this. And then I am more excited than anyone else, or maybe as excited as you, to understand the depth of what we are trying to do. We will come back to you at 5 p.m. Tuesday next week. And until then, all of you have a lovely time, and we will see you next week. Have a lovely time.
Thank
Bye.
you so much, everyone.
Thanks, Meenal. Bye.